Trent Bradshaw, Brandon Rogers with Bradshaw Rogers Financial Partners and Mind Your Money. Thank you for joining us for this market update and actually reallocation update for the fourth quarter of 2023. All right, let's jump right in, Brandon. Let's talk about where we are as far as the economy is concerned, where the Federal Reserve is concerned, and then we'll follow up and talk a little bit about the portfolio. When we look at the overall economy right now, definitely we've got inflation ticking back up. Yep. We've gone from 3 to 3.2 to 3.7. We've got a new number coming here for the month of September here in October. We're expecting, based on what we're seeing right now, around 3.6 to 3.7 again. So maybe it stabilizes. Maybe we found the new norm at about 3.5 to 4% in that range. And that may be all the Fed can do for a while from that standpoint. Probability-wise, rate increases kind of 50-50 on the fence in regards to whether we're going to have another quarter point in the November time frame, and we'll know that within less than a month. Yep. And then the next rate hike doesn't seem likely from this point going forward. So hopefully the Fed is done. If the Fed's done, normally that's a great thing for the market. The market likes that. There's predictability on what things are going to look like moving forward. The one thing we're monitoring is the Fed has reinitiated quantitative tightening, which means they're letting bonds roll off their balance sheet. So again, liquidity's drying up a little bit from that end. And that may be an indication of why they don't need to do any additional rate increases as we move forward. But we're going to continue to monitor corporate profits and where the employment numbers are going. We're starting to see those tick down a little bit, which is what the Fed wanted to do. They were willing to let that go a little bit from that standpoint. So market's a little shaky here rolling into the fourth quarter, but I think that justifies what we've done with the portfolios. Why don't you talk a little bit about that?
Yeah, so also too, what we averted, right, was a government shutdown, so that was a good thing. That's always normally what happens, but we just gotta pay attention to that, and sometimes that's just noise out there. But that is one negative thing out there that the market doesn't have to deal with. But again, like as Trent mentioned, inflation still kind of there, still ticking up, come down again, way off its highs, of course, but still monitoring that. Hence the portfolios and where we're at, we still have a lot of defense or type hedging type positions inside the portfolio. And again, they act as shock absorbers to some of this negative news.
But that doesn't rid the portfolio of risk.
Yeah,
I mean, it's there. We just have a hedge
it's there.
on.
You got it there.
Okay.
So again, theoretically, if the market drops, it shouldn't drop as much. That's the theory behind it. But yes, the losses are still possible. The gains are still possible as well. So like I said, we'll just continue to monitor that and make changes. So we did make some slight adjustments in the portfolio, so you've seen that probably in the next couple days, and you'll see that in the accounts themselves. So.
Yeah, and for now, we still kept energy on because of the inflation situation that we're in. So we wanted some type of commodity exposure to some extent, and we chose energy in order to do that.
Yeah. So again, we'll keep you up to date with everything that's happening and what we're seeing out there and make adjustments as needed. But again, as always, if you have any questions, just let us know. Thanks for joining us. Brandon Rogers, Trent Bradshaw with Mind Your Money. Take care.